Welcome back to Investing and Trading Live, sponsored by Trading Academy. As always, once again, I am your host, Josh Lilquist. On the last segment, we covered a few topics on leverage, the importance of leverage, how to use it properly, safely, and then making smart investing decisions with less capital. That's really what leverage will do for you, is being efficient with the dollars that you have available. And we have classes specifically on leverage that a lot of people were texting into, calling into. Congratulations to those that have done that. If you missed it, you can simply just text the word investing to the number 210-210, and that'll be for 2 seats, one for you and one for a friend. Or you can go into investingandtradinglive.com and you can pick your own date there. That's Investing and Trading Live, title of the show. And also, we appreciate and love our subscribers on the podcast, Investing and Trading Live, wherever you listen to podcasts, Apple Podcasts, iHeartRadio, Spotify, and it's also on that website, investingandtradinglive.com. So if you missed part of the show, definitely check out a piece of that, and also the YouTube stream. We're doing this live on the YouTube, on the old YouTube is what they say. That's what the kids call it. And make sure to check that out. Just go to Josh Lilquist on YouTube. So, Al, in this segment here, it's imperative that people start saving for retirement early. And I think a lot of people just forget about it because they think it's a long-term thing. They say, oh, I got time on my hands and I'm in it for the long haul. And what happens is the long haul starts to get shorter.
That long haul is actually a short haul, folks.
Exactly. It keeps getting shorter and shorter, especially if they don't start early enough.
Right.
Now, that's why we talked about in the last segment the importance of using leverage to be able to speed that up a little bit.
Right.
But we've got a lot of listeners, Al, that do have retirement accounts, and they're concerned about them. Should be at all-time highs, hopefully, or near them. You look at the markets this week, it bounced back after that big drop we talked about on the last segment yesterday morning, bounced straight back up to the upside after that. Now, with those retirement accounts, they want to be able to keep what they have, but then continue to grow that at the rates of returns that they need. Now, stocks provide an opportunity, obviously, but the problem is they're dollar for dollar. You need the physical dollars to buy them. Same thing with mutual funds. Mutual funds are, quite frankly, probably the worst investment you can ever make in a retirement account because of the 4-letter F word that comes along with them. And yes, this is a family show, it's fees. So I want you to talk about some alternative routes that people can take with those retirement accounts, 401ks, IRAs, whatever retirement vehicle it is, to really have that confidence going into retirement, knowing they're safe and secure.
Yeah, unfortunately, most people just become complacent and accept the fact that this thing called the 401k is what's going to get them through retirement, living the lifestyle that they either have achieved or that they want to live. The problem is that most 401ks fall far short of that, and they never were intended to be the go-to for retirement. They were initially put together as a tax haven for high-paid executives, but somehow it's transformed into the go-to retirement account.
By the way, it used to be called the salary reduction program.
Yeah, that's exactly right. Yeah,
and you change it to a 401k. Sounds beautiful, right?
Yeah, and here's the thing: is the responsibility for the amount of money that was in those accounts and for the performance used to be on the employers when they had pension plans. When the 401ks came into existence, the responsibility transferred to the employee. That's the problem, that most employees don't know how to manage those accounts. They don't know. In fact, most people don't even know what's in their 401ks.
So what can they do?
Well, they first of all can understand what's in those 401ks. And I think this is the reason that what we're talking about here is so important. Over 70% of the people now that are over 55 say that they're either going to have to delay retirement or just postpone it, not retire at all.
70%?
70%.
So 7 out of 10 people are going to delay retirement. That's
or
you
not
and
retire,
your neighbors and your friends.
Exactly. And why is that the case? Well, it's the case because they don't have the amount of money that people say you need to have now to live a comfortable retirement. And that number, it has quickly gone from about $1 million to closer to between $2 and $3 million to live comfortably. So what if you don't have it? Do you have it? If you do, fantastic, congratulations. But what do you do if you don't? Well, you can't go through another 30 or 40 years of investing in something that is giving you low returns and exposing you to all of the major market drawdowns. You have to use something that's different. And I mean, let's be honest, you have a shorter amount of time to build some money up. You have a shorter amount of time to get the money that you either need or you want to live the lifestyle that you really desire. You do that by using a small amount of money in an account that has leverage. And we talked about that in last
So
segment.
you can do that in your retirement accounts.
You can, not only can you, I think most people have to learn how to do this if they want to have a chance of living a comfortable retirement. Leverage allows you to take a small amount of money, but control something much larger. We talked about it in the last section, sort of like a mortgage, where you put maybe $30,000 or $40,000 down, and you control the $400,000-$500,000 investment.
Well, let's back the truck up a little bit. Do people need to use $30,000 like that as a
No.
Okay,
I'm just talking about the mortgage example, just to show you that what leverage is.
Okay, so I want to make sure our listeners understand that.
Absolutely.
That you can use much less.
Yeah, and there's two reasons that that's important. One is that a lot of people don't have a lot of money, so they have to start with a small amount. If you put a small amount of money into one or two shares of a stock or a mutual fund that maybe gives you 3 or 4% over time, that's not going to get you where you want to go.
Yeah, 3% is not bad. I mean, that's better than nothing, right? It's 3% on $100,000 is $3,000.
It's pretty much nothing when you pay
that gets
taxes.
you a couple Tootsie Rolls, doesn't it?
You're going to pay taxes on that, and you have to deal with inflation, which is around 3%. That brings you to
basically nothing.
Basically nothing.
But let's address that, because people say, well, it's better than nothing. Well, there are other things you can do that's not just better than nothing, but getting the opportunities that you really need to get to retirement.
Yeah, exactly. So leverage is one thing, but you also have to use something that is short term. So again, let's be real, folks. When you are 65 or 70, you can't put your money into something you're going to hold on to for 30 or 40 years.
So let's address that too, because our listeners are probably thinking short term. Oh, they got to be day trading. That's not the case, right?
That's not the case.
Okay.
Short term is relative. You define what short term is for you.
So it could be a couple of weeks, couple of months even.
It could be a couple of weeks, could be a couple of months. It could be daily. It could be weekly. You decide how often you need that money, how often you would like to be able to access that money. And then a strategy can plan be put together that includes strategies and assets that addresses that time frame and the amount that you think you need. And by the way, a lot of people go into retirement with a plan put together probably decades ago that is outdated, that says, yeah, if you can get maybe 6 or 7 or 5% a year, you'll be just fine. What it doesn't take into consideration is what has changed during that time period. Maybe your health has changed. Maybe your marriage situation has changed.
Well, what if I say there was a sales company that was making cold calls and stuff, and they were still using a rotary phone, but you were told it's still better than nothing. Is that efficient?
Nothing's not so great.
No, so you're going to probably want either a touch phone or even better, a calling system that calls automatically for you. So you got to be in a strategy that's with the times now.
Yeah, not only that, because things have changed, technology has changed. Not only that, but a lot of people that have 401ks that they put together years ago, and they accepted what they were told to do with it, which is just hold on. Don't worry about crashes or corrections. The market always comes back. What I'm getting at is that maybe you have a lot of investments in your 401k that are no longer good investments because the company that money is invested in maybe is no longer a leader in its industry. Maybe that company is, think about that. Maybe you got a stock in something like Blockbuster or Enron, companies that are either bankrupt or just haven't kept up with the times.
Let me see what the ticker symbol on Blockbuster is. What is that again?
It's question mark.
Okay, so it doesn't exist.
It does not exist.
Exactly.
The same thing with Enron. Enron was, that was what everybody wanted to own stock in Enron at one point in time, not realizing that everything they said was a lie, and now Enron is gone.
Yep. So you need a strategy for with what the times are presenting, the opportunities for now, not the opportunities from basically probably the 1980s, because that's when the 401k started. Late 70s was when the 401k started, 78, 79, and it just kept booming from there. But it was a great deal for employers. Now the responsibilities on you, as Alan was alluding to, but that's why you need to use this yourself. Direct that yourself is kind of where he's getting to. Use leverage properly. They say don't put all your eggs in one basket. Well, if you have a 401k, I'm sorry, they most likely are probably all in one basket. All mutual funds or stocks or something that tracks stocks. That is one asset class. That is exactly all your eggs in one basket. Why not be diversified in multiple assets with futures and some currencies and some stocks, right? That way there's ways you can do that with when you direct it yourself. We have classes specifically on retirement accounts, how to direct them yourself, strategies that are designed for today, not for 1980, strategies that are designed for you and the returns that you need, and the strategies designed for that. Simply text the word investing to the number 210 for this investing class strictly on retirement. Text investing to the number 210. When you do that, you're going to get a text right back with a link to our landing page, or you can go straight to investingandtradinglive.com and pick your own seat there. Coming up next, we still got a lot to discuss. Markets are showing really good opportunities again. Just this last couple days here, markets are obviously near all-time highs again. Stay tuned. This is Josh and Al. We will be right back. All right. 14th, right? Today's the
Correct.
12th.
Mm-hmm.
27, 24. Segmented 3, huh?
Mm-hmm.
We'll save that bad boy. Anything you want to cover on this last segment? Let's address what trading investing looks like. Right now?
Mm-hmm.
What do you think?
Mm-hmm.
Because we just addressed the timing aspect because people don't want to day trade. Obviously, that's just a term.
Yeah.
By the way, for those people that are on the YouTube stream right now, day trading is just a term, and it's something that sounds cool, but it sounds scary to others. You choose that. You don't have to do that.
Right. Yeah, I think we also should emphasize the importance of protection,
Okay.
risk management.
Sounds good. So we can talk through how to protect those retirement accounts at all-time highs.
Mm-hmm.
Because quite frankly, the markets are right at it again.
Yep.
Nvidia is up 18%.
Today?
No, in the last 1, 2, 3, 4 days. 18% in 4 days. I think they saved the day yesterday. Because yesterday they were up. They were at about $108 and they closed at about 117, around 16 something.
Yeah, yesterday was an incredible day. The Dow was down over 700 points for a while and ended up
That far,
over 100.
Wow. That's a little bit of a move, huh?
Yeah.
All right, so we'll get into segment 4 here. All right, here we go. Segment 4. YouTube stream is still on. All right, and we got 11:40 on the clock. Set that bad boy, and here we go. Ready?
Ready.
All right. Welcome back to Investing and Trading Live, sponsored by Trading Academy. Once again, I am your host, Josh Lilquist, with my good friend and my good pal. He is the one and the only Al Connix, and that's just to our knowledge. There might be another one out there, but there is only one like you, Al, and we appreciate your time on the show here today, dropping some knowledge on stocks, how they work, and just helping our listeners make smarter investing decisions. And on the last segment, we talked about really kind of a continuation of segment 2 and 3 with the importance of using leverage. In this one, it was in your retirement account, not having all your eggs in one basket, keeping some of that money in cash, using that with leverage by using smaller amounts of money. And options is a great way or a great asset to get into those retirement accounts. That way you can use that smaller amount of capital, but also strategies to protect, which is what we're going to talk about here on the next segment. If you did miss seats for the investing class that we do locally here at the Academy, by the way, we have these classes all across the metro area during the day, during the weekends, during the evenings, mornings. So pretty much anybody can attend. If you want to come into these classes specifically on retirement, or there's ones on income strategies, simply just text the word investing to the number 210, and that'll be for 2 seats, one for you and a friend. Text investing to the number 210 for 2 seats for an investing class near you, or go to investingandtradinglive.com. So in this segment, let's talk through and discuss those techniques where, especially at all-time highs right now, Al, there's obviously opportunities, and people should be the most wealthy they have ever been, if you think about it, but people still aren't. And it's because they're not always protecting their portfolios. There's ways to protect that portfolio, because that's important, especially at all-time highs. You look at the overall stock market, especially last couple of days. We've been near all-time highs for a while now. Mm-hmm. But people still you mentioned earlier, still are not reaching those retirement goals. How do you protect those portfolios at all-time highs, but still be able to continue that growth in those as well?
Yeah, I think a good question for somebody to ask their plan sponsor, if you have a 401k or your plan administrator, ask them how you're protected. How are your assets in your 401ks protected, or even in your regular investment account? If you have an investment account with a broker, that's a great question to ask them. My guess is that the answer will be, well, we have you diversified. But as I mentioned in one of the earlier segments, diversification cannot prevent loss. It might mitigate it a bit, but just because you're spread out amongst different sections of the economy in stocks or mutual funds, what happens when the market does crash or correct is that the correlation between equities becomes huge, so everything gets drawn down at the same time. So if you're not getting a satisfactory answer on how you're protected, how do you do that? Well, we show you how to do that, how to hedge your portfolio, how to use assets that not only can be used as protection, as the equivalent of an insurance policy, but also how to benefit in a down market. What happens to your 401ks when the market is going down? And if you watch the markets, if you looked at your 401k back in 2022, if you were extremely lucky, you were down a little bit less than 20%. Most 401ks, almost every one of them, was down over 20% in 2022. It's because the way that those are structured, it's hard to almost impossible to have protection. So we show you how to do that. We show you how to protect what you have in a 401k, how to hedge your portfolios. And it's even more important than protecting, it's benefiting in different directions. And remember, when the market goes down, the return you have to have on the upside has to be much bigger than what you just lost. If the market goes down 50%, you have to be up 100% just to get back to where you were before you can make 1 penny of profit. If you're down 40%, you have to be up 67%. So you have to keep that in mind, and you never want your portfolio to take a hit like that. There are ways of making sure that that doesn't happen. So protection is huge. In fact, if you go back to the year 2000 and 2008, Josh had just mentioned that, we're at all-time highs. We were at all-time highs then, too. There were a lot of people who retired in 1999 or 2000 or 2007 or 2008, thought they were set for life, and all of a sudden they woke up the next morning, or it took more than one morning, but over the course of the next year or so, they had lost 40 to 60% of what they had and were relying on in retirement. And what we found, in fact, T. Rowe Price examined their portfolios in that their clients had during bear markets, the one from 1973, 2000, 2008. It took 10 years on average for the accounts to get back to where they were before. That's in a bear market. What if we have a flat market? What if when you retire, we go through a period of time where the market really doesn't do anything? How are you going to survive without your portfolios growing? And have we had things like that? Yeah. Between 1902 and 1920, it took 18 years. The market had no movement. 25 years between 1932 and 1957, a flat market. From 1976 until 1992, 16 years before any profit could be made. And then from 2000 to 2014, that's 11 years. I'm sorry, 16, 15, 14 years. My math wasn't very good there. From 2000 to 2014, there's 14 years where you weren't making any money. And during that time period in retirement, you're probably drawing down money.
Yeah.
And that money that you're taking out, you're paying taxes on. So you need to make sure in retirement you have enough income so it not only provides consistent income for you, but it does so in a way where it at least outpaces inflation.
Yeah, and that just like a lot of things. So there's people in that camp that are afraid, the market's going to go down, but there's also probably half our listeners that are out there that are thinking, well, this market's going to continue to go up. It's supposed to. That's
Right.
what you hear all the time, and quite frankly, that's what it's showing.
Yeah.
So let's have that discussion, because what are some things people can do? I mean, even though the markets are going up, people hopefully have the most money they've ever had, but it's still not enough, right? So what would
Correct.
you say a good opportunity to do with that is? Because if they feel it's going to go up and just doing the same thing over and over and expecting a different result, you know what that is. I mean, everybody knows that's insanity. So how can people stay in the market if that's what they think?
Mm-hmm.
What can they do to boost those returns a little bit? Would using options be probably the best opportunity for that?
I believe that options probably are the best opportunity. That's what I trade. I may be a bit biased, but even back when I was a broker, that's one of the things that I use for some of my big clients to help protect their assets, but also allow them to stay in the market for growth.
Mm-hmm.
And you can do that. There are option strategies where you're protected if the market goes down or if that asset goes down in value, but you're also still participating if it goes up in value. And you may be thinking, how's that possible? Well, come in and we'll show you how that's possible.
Yeah. It's because you can.
It's because you can.
It's the strategies that are designed for that. And it's just like anything, if you think about it, Al. If you don't know, you're not going to do it.
Mm-hmm.
But that's why you teach these investing classes. I mean, your background as a broker, you have kind of the best of both worlds there, because what a lot of people appreciate is the brokerage side of it, but also you knowing what they're doing and why they're doing it, and you can get that point across to them so they can understand it may not be that good for you. So that's why these investing classes, especially this summer, with the way the markets have been exploding right now. We've been having so many people come into these classes, people just like you, to just get more insight, to know what's going on. And then once you know what is going on, what are some of the strategies that you can use for yourself to get to where you want to be, whether it's financially or time or schedule or freedom. Freedom of time sometimes is what people are just looking for. It's not always just monetary. And that's the great thing about the markets is it does provide several opportunities. It's not just monetary. So these investing classes that we have all across the metro area, also in our state-of-the-art facility here, we're actually right here in Bloomington, and a few different classrooms. These classes are really where we've taught thousands, just like you, our strategies, which are designed to help you make smarter investing decisions. They're about 2 hours long. Al, in about 15, well, I'm going to give you 20 seconds here today. Explain a couple things they're going to learn in this class.
Well, there's a lot of things you'll learn. One of them is how the markets function. Why does price go up? Why does price go down? Who makes that happen? And how can you benefit from that? And you'll also learn about the different assets that are available to trade. We don't care what anyone trades. You can trade stocks, you can trade mutual funds, but we want you to know what the benefits are in assets like options, futures, Forex. We'll talk about protection, talk about leverage. We'll talk about having profits in a down market, not just an up market. You don't want to miss out on 50% of the opportunities.
Yep.
So
So
yeah, go ahead.
basically the opportunity is there for you. You have to take action. And I want to give away one last set of tickets for this investing class right here at the Academy. Simply to come into this class is specifically on income strategies and retirement strategies. Text the word investing to the number 210-210, and that's for 2 seats, or go to investingandtradinglive.com. Al, we've had a great discussion here today. Let's hear today's OTA tip of the week.
Well, I want to quote Dr. Stinnett Ballou.
I think you're going to say Dr. Seuss.
No, not this time, maybe next week. Quote, I want to do what I can while I can, so when I cannot, I will not wish I would have when I could have. Hopefully that
That's a
wasn't
tongue
too
twister.
confusing. So look, if you have a dream, if you've got a goal, and you don't take action to achieve it, you're just simply not going to make it a reality. It has to start with a single action. You have to be the one taking that action. So you can't always, and I'm going to say almost never, wait for the perfect moment or the perfect time. You have to create it.
Now is that time. I want to give you an opportunity to hopefully change your life or improve or enhance whatever that goal or objective is. As Al said, it does take some action. Text investing to the number 210-210 for an investing class strictly on stock strategies, Forex, futures, option strategies, income and wealth, or go to Investing and Trading Live. We had a great show here today. Stay tuned next week. As always, same time, same place next week. Until then, retire young, my friends.